Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Today, I want to show you what's happening around the world as we see recession picking up, as we see the conditions increasing for more turmoil. I'm going to show you all of this and more. Let's begin by taking a look at Larry Fink, the head of BlackRock. He sees elevated inflation for years due to supply shocks. It's been aggravated by lockdowns in different parts of the world. It's more supply driven. That's what he has to say anyway. And there's something at the bottom that I wanted to just make you aware of. Quote, "We are going to have bouts of fear that will create market turmoil. We have not witnessed huge asset allocation changes by our investors." And so we can see that these investors have stayed the course, simply putting their money where they did before. And that's how we know we have not hit peak fear. This is very important. If you understand that people suddenly change their mind, why haven't we seen, suddenly gold come and rise up? Why haven't we seen big changes? It's because we are not at peak fear. And so that's just one indication of that. But you see this all along with what's happening with the total amount of people shorting. If you look at what's happening with the VIX or volatility index, these things do not show that we are at peak fear, okay? What about this? Citi CEO says the US will find it difficult to avoid a recession, Europe more likely to sink in a severe downturn. You could see, as they say here, more CEOs are seeing dark clouds ahead. It's not just one or two. Pretty much all of them at this point have said something to this effect. And it's basically, we're in for a wild one. Europe definitely felt more likely to be heading into a recession than you see in the US. Still, even the US, a recession is not easy to avoid. And so we have all of these different things. By the way, in the previous video to this one, I covered all of this, showing you how we have multiple levels in which we have not seen before. There are basically all the reverberations of the past coming and being piled up on top of each other for one grand event. Okay, so this has all been piled up, and we will see how they're able to temporarily resolve this issue yet again. The data doesn't support predictions of looming catastrophe. Friday's job report showed bigger than expected payroll gains, and economists see a recession as unlikely next year. In fact, a Bloomberg survey estimates a 30% chance of recession in the next 12 months. That's still up from where it was in March, but they never are able to anticipate a recession, okay? Just overall, like when you just look at those who manage money, because if they believe that, well, then it would look very bad on them. They're holding clients' money, they're managing money, and they don't want to show that. I think on the market side, it's been healthy. It's very good volatility, and it's one where we're in there helping clients manage foreign exchange and manage volatility. We probably had a little less confidence about how active the second year will be. You could see some more things coming back. So we're in a bit of wait and see mode. See what happens there. So these two things connect in the previous article I just showed you and this one. You could see the mentality from these big individuals, what they're sharing about what their investors and those they work with are doing. And then we have this on a personal level. Heavy rains, gusty winds damage homes, flood roads, stall cars across South Florida. So this was quite intense in some areas. And the reason I mention this here is simply that we must be prepared in any way that we possibly can. Okay? Investing is not just which stocks do I buy. Investing is not just a simple one-dimensional situation. It is multifaceted. I mean, if you had all the Amazon stock in the world, all 7 shares, and you didn't have, power to your home, if you didn't have food available to you, what would all those 7 shares mean? I mean, not much, right? And that's why we need to be prepared now, not when this happens to you and your car is floating away off into the distance. No, you need to be prepared in advance, okay? Housing boom fails to lift all homes above previous cycle's peak in 477 cities. The typical home value at the end of April was below that from early 2000s. You believe that? 477 cities. Now we're talking about Detroit and we're talking about other cities here that have been beaten down very hard and don't have potentially as much potential as they would say. But you look at it and this is big. This is important because number one, buy and they will always go up in value. That's not true. Buy this stock because it will always go up in value. And if you go to any financial advisor, right on their desk, they have a laminated sheet with the stock market. Every year they get an updated one and it just shows you that line. It's going up, 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 right? Okay. And then you go to any influencer online and they will show you the same thing. Just keep investing. It always goes up. Tell the Japanese that. Look at those people in the 477 cities that bought at the absolute peak because everybody around them was doing it and they were all frantic. Tell that to the people who bought any number of stocks that never came back. This is not true when you look at buy and it will always go up. No, you have to have intelligence about the things that you're buying, about the assets you're buying, about the companies you're investing in, about the locations that you're involved in. Just because that home is half the cost as you see it in another city, that means it's a better value? No, not necessarily. And what's going on? We see all around central banks are tightening their belts. Even the ECB suggesting this. Can you believe this? My friends in Europe, I got a couple for you here. The ECB is about to join the global bandwagon of monetary policy tightening, spurred into action by repeated record highs in inflation. And I know what's going on. Obviously, energy playing a big role. That's why we're talking about that today. Almost 3 months since the US Fed delivered its first interest rate hike, its Eurozone counterpart will this week announce an end to bond purchases and formally begin the countdown to an increase in borrowing costs in July. So we'll see if they actually go into positive territory and what they do. You can see right now the different decisions that are coming out this week. Australia, I'm looking at you. All right. Hit that thumbs up. Don't forget to do that. I appreciate that, okay, to support the channel. It's just showing us where we have certain places of the world that are really rapidly accelerating and others are taking a more cautious approach, okay? So in Australia, they're talking about more aggressive, so we'll see what happens on Tuesday. I will obviously bring you the details. Look at what's happening with gas, and it depends on where you live. Okay, that's what I'm trying to show you here. California is the blue line, and the national average is the red. Okay, so you see where the current average is, yesterday, a week, month, year. Ultimately, whatever you see, wherever you go in time, California is more expensive than the average. California is extremely expensive. California has higher taxes. California is really changed over the last few years, especially. And so what we're seeing right now is an exodus of people moving out of California or moving out of certain areas of California simply because they can't afford it. Do you see what happens when things become too unaffordable? People just say, I can't do it anymore. So there is a limit. There is a limitation in these various factors. Energy stocks are still at record cheapness versus information technology. So even in these cycles, within these cycles, and you look at the valuations of these different companies and so on, going back to 1964 up until the present, it is right now historically very cheap to get energy stocks. Can you believe that? Even though they have done so well. And by the way, you're looking at this and you're saying, well, 1964, there wasn't much tech then. Look, there's always technology. Always. Every year there's new technology. It's just what was in at that time. Okay, maybe it's ancient now, but you compare it to how it was before it was invented. I mean, these are huge developments. Anyway, record high Memorial Day gas prices are stinging consumers and impacting travel. And this ultimately is what I'm coming up with, okay? Because you look at all of what I showed you today, high gas prices, you look at the tightness, you see what's happening all over the place. And it is important to understand that you cannot do all of these things without creating, a recession, sometimes maybe a brick wall that just smacks them in the face. You can't do that. I mean, it's just inevitable. So what could people do? Well, they need to prepare for themselves. If you knew in your head stuff was going to cost more tomorrow, next week, next month, what would you do? If you knew that product that you go and buy every single week, maybe it's the pasta on the shelf, maybe it's the water, whatever you're buying, if you knew it was more expensive next week, wouldn't you buy 2 times as much or 3 times as much? Maybe that would be a good idea. You would buy in bulk. What about, things that you can do, like some of the people in California, they're simply walking. They're going away. And I understand why completely. It's not just California, by the way, it's other areas. And then we have this interesting Canadian crude crash. Heavy Canadian crude's discount grows to the widest in 7 months. So if you see that compared to the WTI, you look at this. Why? Because all the refining is more expensive. Canadian crude, it's, not the easy stuff to refine, essentially. So it is more expensive to do that now today. Any product, if you look at the supermarket, what's the stuff that has really increased in price? It's that which requires processing. The more processing involved, generally, the more processing, the higher the price. So that's why, your Apple might not necessarily have gone up quite as much as, some boxed stuff, whatever that stuff is, okay? It's just the way it goes. And then to finish off the video, you stay to the end. I'm giving you a little bit of humor, but a little bit of a rant. Real estate agents got $3.9 billion in PPP loans. You remember this stuff? The housing market boomed, but few repaid the loans. And why is that? Because they were forgiven. So these people, these real estate agents who operate as a business, they applied for a loan. There's one, by the way, it says in this article, you could read it for yourself, links in the description under the sources. They say it right here. They apply, they get money. Their job didn't go anywhere. I mean, probably for a few weeks, there was a little bit of a concern, but everybody started buying homes like crazy and they were willing to pay anything. This is had become one of the most lucrative jobs you can find, a real estate agent, a realtor. And what happened here? Did they have to pay it back? No. In almost all cases, they did not have to pay that back. They were forgiven. So taxpayer dollars went to bail out real estate agents that made more money than ever before. Now, this is not a knock against the real estate agents. What I'm saying is you have a system that creates inflation. Do you see? Just throw the money out there. Real estate agent, sure, here's some money. No, you don't have to pay it back. Don't worry about it. A loan with no interest would have been one thing. That would have been one thing. But to just give people the cash, big sums of money, and they didn't even need it. It's different than somebody who's destitute, who's got serious issues and needs the cash. You can make an argument. But what? Really? Am I the only one that thinks this way? You let me know in the comments below. Okay, and if you're a real estate agent, you can let me know. If you're in the financial industry, mortgages, what have you, let's discuss that below. I mean, I don't think it's right, but that's an opinion. Okay, so you are entitled to yours as well. If you want to support this channel, simply hit that thumbs up button. I'm coming on here every day when I'm doing good, when I'm under the weather, when I'm traveling, when I'm in my bunker, in my bunker here. Yeah. Anyway, I appreciate you being here. Let's get this channel to 282,000 subscribers. Let's do it. See you soon.